not be able to stay home, brother. You will not be able to plug in, turn on, and cop out. You will not be able to lose yourself on Skag and skip out for beer during commercials because the revolution will not be televised. The revolution will not be televised. The revolution will not be brought to you by Xerox in 4 parts without commercial interruptions. The revolution will not show you pictures of Nixon blowing a bugle and leading a charge by John Mitchell, General Abrams, and Spyro Agnew to eat hog maws confiscated from a Harlem sanctuary. The revolution will not be televised.
Hey, it's Soleil, and this is episode 511 of the Orange Pill Investor. And today I want to talk about revolution, and not just metaphorically, like literally. And I was supposed to talk about it last night, but we end up having to succumb to a gag order. And just until I guess they complete their deal or whatever. But what's up, Buffalo? And so I'm going to go ahead and I'm going to give my intro that I was going to give last night. And I've been anxious to talk about this for weeks. I've been binging like history podcasts and noticing some parallels. So I think it's pretty cool. If nobody else does, that's fine too. But so a little story time. Every meaningful revolution has 3 principal characters. They are the poet, the prophet, and the prince. You could also call like the prince the warrior general, but then you don't really get the triple P alliteration. Alliteration doesn't really sound as cool, and it doesn't really matter if what you're saying is right or wrong. It just has to kind of sound good. That's the important part. So a good example, or the one that I chose at least, is the French Revolution. And in this case, the poet was Rousseau. And he wrote the social contract, and kind of, I don't know if he came up with the idea of the will of the people, but he definitely popularized it or injected it into the consciousness. And obviously we talk about that in U.S. politics, but this kind of revolutionary thought spread all throughout Europe and kind of panicked all the monarchs. Like holy shit, the will of the people. Like, what difference does that make? Usually they kind of only have to worry about the will of the court, and like how many of the royal court are like on their side. If you can keep enough of the court on your side, or the regional, I guess lesser monarchs, all in some kind of alliance, then you can just do whatever you want. But now all of a sudden we got to worry about the will of the people. And after the poet, we got the prophet. And the prophet is the person who leads the people into the direction of the revolution. He not necessarily the one that gets them all the way there, but he's leading them into new territory. And these guys aren't always awesome. It's not kind of like how we idolize the founding fathers and put them all on dollar bills and shit. So this guy was Robespierre, and he led the population through the next phase. And unfortunately, this particular part of the revolution wasn't terribly peaceful. It was called the Reign of Terror because of its liberal use of the guillotine. So lots of heads rolled during this time period. He basically had all of his like external enemies and threats executed, but then he had some like internal threats too that he perceived that were kind of allies, and I think he had them all killed too. So that was kind of fun. after the prophet, then there's the prince, and the prince was Napoleon, and he consolidated power throughout Europe, created an empire, and so the revolution spread across Europe at the space, basically around the same time that revolution was hitting in, well, it's now the United States, but it was the colonies, and we had a revolutionary war about that whole good thing. And so the the will of the people was prominent in the formation of the United States as well. And this wasn't when like nation states became a thing, but it's kind of like right around now when the nation states turned from monarchy rule to supposedly the will of the people and democratic rule. And I think that if you're a Bitcoiner, then you're probably assuming that there's going to be an economic revolution with Bitcoin imposing a global free market on the world. And in that case, if we've got our three principal characters, I think clearly the poet is Satoshi, right? Author of the white paper, wrote the code. He brought some other folks in, but that seems pretty clear and obvious. Next, we got the prophet, and this one's definitely just going to be my opinion. I think that is Jeff Booth. He's the author of The Price of Tomorrow. He's a thought leader in the space, and it seems like he can just see the future. Like he sees where Bitcoin is going, and seems to be able to envision maybe not the exact future that we're headed to, but an extremely credible one. Luckily, we've got proof of work and digital power, so no need for heads to roll this time around. The hopefully that the principles in soft war allow us to go ahead and resolve our differences with digital power instead of guillotines, all that good shit. So that leaves us with the prince. And I've been thinking about this for weeks and anxious to talk about it. But when I heard the response to Ben's question at the end of the earnings call, and I quote, "We want to eat the world," unquote, that was confirmation for me that the prince of this revolution is Michael Saylor. And so it's time for the general to get out on the battlefield and marshal the troops. And, he said he wants to create a monster and eat the world. And in, this time, it's digital power, so it's bloodless. So that's a good thing. But I'm also on board with what Jeff Booth calls the inevitable future of 8 billion people in service of 8 billion people. And I think Bitcoin is going to decrease the likelihood for war, global violence. It's going to clean up all of, the basic error code in all of societies, all of the tainted research, all of the errors in the industrial complexes that have been forming. We got the medical industrial complex, we got the pharmaceutical industrial complex, we got the military industrial complex. We got basically a complex for everything. And everything is built on the basic error that money can be debased. And I think that what Saylor is doing is, he likes to talk about his amplified Bitcoin, but if it is amplification of Bitcoin, and we think of that as amplification to the price action of Bitcoin, but if it's amplified Bitcoin exposure, then it's amplified Bitcoin's mission, which is imposing the free market on the world. So the faster that can happen, the better, the more lives that can be saved. and I'm here for it. But the beauty of of this is not only is it going to be good for humanity and the world, it eventually should be good for my portfolio. Now, story time is over, but today I think is the first day that the 1 year chart is read. If not, I'm not off by very much, and I've been kind of dreading the next 14 days because when the 1 year chart is right here, it's gonna be fucking brutal. Imagine if we're below. I mean, right now is bad enough. It'll be down 50% from all-time highs here. Well, actually, not even all-time highs, the 1 year. So the all-time highs in the 1 year chart will be identical. And so the bears, I cannot wait for November 20th when they can screenshot this shit next to this. You know, Bitcoin will be up, even at current prices, Bitcoin will be up 10, 15% or something. So the strategy bears, man, are just licking their chops. They're just biding their time. This might be the only time that the MSTR bears are actually demonstrating low time preference, because they're just biding their time and waiting for November 20th and just cannot wait to screenshot the Bitcoin 1 year chart, which is going to go from 94 to, actually it's just barely break even. But being up 5% is a hell of a lot better than being down 50%. So the FUD, it was suggested that me kind of second guessing myself might be the bottom signal yesterday, but November 20th might be the absolute bottom signal, because it's going to be just the most insane and intense negative sentiment, and how we could even drop from here. Yeah, I did say that I wanted to keep 1,000 shares and not leverage below that number. So I could potentially add more leverage at 225 and maybe a little bit more at 200. I was hoping I wouldn't have to do that below 225. But man, imagine if we're sub 200 before November. Sentiment is going to be absolutely in the toilet. It seems like it can't get worse, but it can always get worse. Don't you worry. Things can always get worse. Hopefully this will be a double bottom. That would be nice. Hopefully the chart people, maybe this will come to pass. We'll get a nice double bottom here. But if history repeated itself, what did we get? We got like 1, 2. We got a triple bottom here before we got a move up. And, maybe that fits into the whole extended cycle, super cycle theory, because it took from basically November to November, to unwind a double bottom. Who knows? There's another 6 to 12 months to unwind, another to test, 450 again, get rebuffed, and then sent back down to fucking 250 again. Imagine the sentiment in 6 months if we get a rally at the end of this year or early next year, and then we don't get all-time highs again. And then, oh my God, 6 months from now, we're still sitting right back at 250. It's kind of painful and hilarious to think about at the same time. So I'm more bullish on strategy long term, even than I was when I saw QuantBros 1, which was kind of like the light bulb moment for me. And all of the catalysts are pretty much gone at this point, and it's really just conviction in strategy. That's all that's left. So you either believe that their amplification strategy of borrowing money that they never have to pay back, but only pay back the interest, and the interest will be less than the CAGR of Bitcoin itself, and they will be able to capture the spread. If you don't believe that, then there's nothing left, really, because S&P 500 catalyst is on the back burners for now. I did think it was interesting that the S&P the S&P rating committee was like, here's your B minus, right? You guys were B minus before, you had us remove your rating. We're giving you the same rating right back. And basically said, we're not going to give you credit for your Bitcoin. So it was almost kind of like a challenge, like change your business model, or you're just going to be stuck with a B minus forever. That was that's the way that I interpreted the S&P rating of a B minus was. It was basically kind of like, here's the recipe for if you want to get included, you got to jump through these hoops, which would probably be like selling the Bitcoin and like actually showing a profit. Now that would probably screw up their return of capital thing potentially. So I don't think they could do this even if they wanted to. I need to double check that, but I think it's because their gains are always going to be unrealized gains. And if you don't have realized gains, they shouldn't be taxable. So then maybe that's why the taxes are tax deferred. I could be misunderstanding that. And apparently that tax rule is pretty old, so it's not like a new thing. But what might be new is getting the clarification from the IRS that that's how they're interpreting it, and they're basically saying, yeah, you guys are good to go. So I don't know if selling their Bitcoin would screw that up or not, but doesn't really matter. The point is, S&P 500 inclusion is inevitable. It's just not going to happen until Bitcoin makes it happen, because that was kind of like the clapback that Saylor gave, right? They came out and said, okay, we got this rating, and we'll get in eventually. We're not going to do anything. We're not going to do anything extra to get in. But they know they can just sit on their hands and do nothing, and Bitcoin will impose the free market on the world, including the S&P 500, including the rating agencies. Everyone is having the free market imposed upon them. So right now, there's no free market. The ratings agencies can just do whatever the hell they want behind closed doors. The majority of their customers don't have Bitcoin in the balance sheets, so it costs them nothing to shit on the handful of companies that do have Bitcoin. Right? They can basically just cater. I can't. The word is escaping me, but what is it when a politician appeals to certain voters? Like when Hillary Clinton was walking around with hot sauce in her purse. Anyway, whatever the hell that's called. They can just do that for now. But when more and more companies have Bitcoin in the balance sheet, and when more and more companies have preferred offerings and they're eating the bond market's lunch, all of a sudden the economic incentives are going to be aligned towards catering to Bitcoin treasury companies, not catering against them, and basically, right now they would be penalized. It would be like rug pulling most of their clients if they said that Bitcoin was just as good or better than the shitty debt that the rest of the companies are offering. That would be one hell of a rug pull. But eventually, they will have to capitulate and bend the knee. So it's kind of interesting to hear Strategy just come out and say, okay, we don't really, we hear what you're saying, but you'll cave eventually. And it's kind of like your move. We're just going to keep doing what we're doing. So like all of the catalysts are kind of on the back burner. We've got, maybe lowering interest rates, but the only thing that we're actually left with right now is all the catalysts are gone. Do we still believe in what Strategy is doing? And clearly, I'm wondering if this pump up here, I know a lot has been said about the post, or the election hype kind of thing. But I think all of us believed S&P 500 inclusion. I mean, some of us even were thinking Q4 2024, because they could have revised their earnings. And Bitcoin was so high in November when we had all-time highs here. Strategy could have revised their 2024 earnings. They would have been eligible to qualify for S&P 500 here. So we were already thinking in 2024 that S&P 500 was inevitable. And so I'm wondering if the market has kind of sniffed out ahead of time, because the market figures everything out 6 to 12 months early. It's forward looking. So, we were all kind of trying to front run the S&P 500, but we may have missed. I guess it's better to be early than late, but we might be like a year or two early. Who knows when the hell they're going to get in? So maybe the market figured this out before I did, and that's part of this hangover here. Is why we've been underperforming. Is there might have been a lot of front running the S&P 500 built into this, and the air's been let out of the tires with regard to the all of those passive inflows that I certainly thought was coming. And I can't remember who put the poll out, and I said no, we won't get in on Q1, but we'll get in Q2. And now I'm not convinced we'll get in 2026 even into the S&P 500. It's gonna take a while, I think, for Bitcoin to work its magic. But we'll see. Deeply says Josh Mandel's in Spaces right now. Is it his own Spaces, or you joined somebody else? And what's up? Yeah, it's already brutal. But man, is it the sentiment is going to get real bad once we're 50 exactly. 365 days from all-time highs. It's going to be cray. Buffalo says the blood is my own. I can't force myself to roll my short calls below 340. Yeah, man. I know what you mean. Every time I roll down and then the price falls, I'm like, can I really roll down again? But I've been thinking that way this whole time. I'm like, when we went down to 400, I'm like, man, I don't want to roll below 450. And then when we're down here to 350, I'm like, man, I don't want to roll below 4. And it's, there's a little bit of a okey doke right here. Selling the 350s, barely got pressed and threatened. And then it's like, okay, I don't want to roll below 350. I don't want to roll below 300. I don't want to roll below. It just keeps crashing. But it would have been true here, right? You don't want to roll too far below 3, because if you rolled down to 350 in April, then you missed out on the run from 350 to 4. But did you really? Because you probably could just roll another month, and you'd probably these would probably be expiring out of the money, or you'd at least be able to find some kind of strike to roll for a credit. But then, yeah, so your 350s are getting wrecked. You're desperately trying to roll your shorts, and then you get a little bit of breathing room here. You're trying to roll to 375, and then you get pushed to 450. But then, all you got to do is roll into August, and there hasn't been a single strike threatened for 3 straight months. So, that just gets to, like, do I have the balls to call the bottom? Do I have the balls to call this the bottom? It would have worked here, here, and here. But what's the S&P 500 doing? I would assume it's down too. Yeah, it's down a little bit. Yeah, so S&P 500 has just been delivering. And so this is a little bit of a sell-off. I don't know. I don't know why these things happen. Maybe a little bit more nervous about the government shutdown. But yeah, it is kind of annoying that I have to scroll all the way out to the 5-year just to get a green chart. Like, anything under 5 is red. Boy. So Tyler, if Bitcoin reaches new highs in Q1, I love the S&P 500 odds in 2026. I think I'm alone. So you're bullish. Yeah, I mean, you're bullish on the S&P 500 too. Yeah, I would assume so. Rates coming down is going to be good for everybody. All right, so let's knock this out. Any trades to make? I would be targeting half of the trade price. So when this gets down to 450. So oddly enough, this is actually not ready to roll. I mean, I've only had it on for 2 days, so this kind of makes sense. This one's ready, which unfortunately I've only had on for a week. And it's already at 43 days to expiration. So that the only way that I can even roll this for a credit is I can't even roll out. Usually we try to roll out for a credit, but I'm already at, as far as I generally like to roll out. I mean, I could go to 50 days, but I'd really rather not. And so the only thing that I can do here is roll my strikes down if I want to capture some more premium. So if I wanted to go, if I wanted to roll all the way to, sub 300s, I can get some more of a credit. Actually, what are they worth? They're worth 3. Yeah, they're worth 3. So actually I can roll to 300 for a credit. But let's look and see if that even forms a safe position. So adding the 250 to the 70 gets me to 320. So I wouldn't want to roll below 320 in this case. And in this case, I wouldn't want to roll below 350. So halfway between 20 and 50 is about 35. So what can I get at the 335 strike? Yeah, a tiny little credit. So that is unfortunate. That's Yeah, basically kind of what Buffalo's saying. Can't force myself to roll my shorts below 340. And with the way that I have these structured, I kind of can't. I would put myself at risk for these positions to get wrecked if I tried to trade below 335. So I'm kind of stuck here. Now, it's only been on for 7 days. So if I hold this for another week or two, I should be able to collect more of this premium. But it's the premium is getting painfully thin. Now, if I had had the 200 strikes instead of this, then I would be in this position. And this would be holding on to way more of its value. And I would be able to sell as low as the 300 strike, collect more premium, and not be getting wrecked on my long calls. So, but when I opened this 250 134 days ago, that's 4 months. I mean, the price looked a hell of a lot better then. 250 looked pretty safe. And even like 90 days ago, 300 didn't seem that bad. And that's the problem with these poor man's covered calls. When the price is collapsing, if your long strike that's supposed to be deep in the money goes out of the money, it gets pretty rough. As opposed to shares, where if you don't mind risking selling below your cost basis, there's nothing mathematically stopping you from doing so. But again, these are not ready to roll. So doesn't look like even though I would love to roll this because there's not that much premium left, I simply can't. There's no room for me to roll out, and rolling down below 335 would put me at risk of these calls not being formed correctly. Now I could just blow up these positions and buy like some 175s or 200s. I'd probably end up with about half. So instead of selling 9 covered calls, I'd only have like 4 or 5 of them. So I could totally do that if I wanted to. But I'm just going to go ahead and try to just let these play out. Let's see how this works. Like, the damage has already been done. There's nothing I can do to save this position. The only thing is if I had credible information or a credible belief that I just know based on some kind of chart or whatever. Like, if I just knew we were going to 175, then yeah, I would want to do something with these positions. I mean, if I knew that was going to happen, I would just take all my leverage off and wait for that to happen. But I don't know what's going to happen. All right, the IRA. This one, I kind of went back to my roots a little bit because I rolled a couple things and took a little bit of profit. And then instead of just YOLOing into more of these long calls, I went ahead and added more short positions in something cheap that I could afford. And it looks like I'll probably be getting assigned some shares since Bitcoin's taking a dump and all the miners are going to take a dump with it. But yeah, Tesla's not ready to roll. These have only been on for a day. They're not ready to roll. These have been on for a week, but they're not. I mean, the price is ready to roll, but again, I'm kind of backed into a corner here. There's nowhere for me to go. I can't roll out. And I really can't roll down too much. Actually, 250 and 40 is 290. So I could roll these down. Should I do it? I could roll this down as low as 290. That's interesting. I'm just going to do it. So probably going to go, yeah, I could go, the 290 is the expected move. Let's just go to a nice round 300. That's going to let me capture double what they're worth, right? They're worth 3, yeah. So a nice round number of 300. Reshare without volume. Okay, we got fills. So that's gonna give me like $3,000 to play with. I guess like that's 4 total, whatever. So now I'm gonna continue with this kind of new strategy of adding positions with this money instead of adding YOLOs, instead of attack the tails. $4,000. I'm tempted to stick with BITF for the simple, like, just for ease of trading, but I don't really like the idea of trading too much under $10 a share, right? If Bitcoin does go down to 85K again, then this probably trades down to $2 and there's just like no premium there. So I'm actually going to try to find something closer to $4,000. What's iron cost? Is it up to like 60 or 80? Okay, so it's up to 70. What is HUT? HUT's at 40. So that's interesting. That's an interesting option. Is it down? Okay. So it's falling off a cliff from 50. So what could I get for this? Let's go. I mean, I can just look at tomorrow. So I could sell. I would have to sell the 40 because I don't have enough. Yeah, so maybe I won't do that. What is that for a week? I could sell the 40. That's actually pretty ridiculous. 1% returns would be 40 cents. And this is over 3 times that. Close, actually 4 times that. So that would be like 4% for 8 days. And it's not even the at the money strike. It's about half of the expected move. So I could do this for next week. Let's see. Bid ask spread is 20 cents. Let's see what else is available. CLSK has been good to me. That's trading for 15 and down 6%. What was that up to? 22? Interesting. So I could actually sell not 3 of these. Well, actually I could, probably. Because, no, still probably 2 of them. Yeah, and I like the bid-ask spread on this much better. So let's do 2 of these bad boys. All right, that took $3,000 of my buying power. Motherfucker, I'm looking at the wrong account. Right? No. Why didn't that take my premium? I think maybe I'll have to refresh. Let's refresh. Okay. So Tasty Trade was kind of annoying me with this a little bit yesterday as well. So I've got $4,000 I've actually got more buying power than I started because I had 4 and I just got paid $180 for the premium. So they're not holding the collateral against me for some reason, even in this IRA, which doesn't make any sense. Let me just look at this again. If I try to do this again, I want to just look and see. So it's saying estimated buying power effect reduced by 1,400. Yeah, and so it's telling me I don't have enough to do this. So is this listed here anywhere? Okay, so maybe it's this number, settled cash balance, representing the start of the day. Excess cash, equity outside of your margin requirement. I don't have a margin requirement because this is an IRA. All right, so maybe it's this. Maybe this is the real number. Because I have 3,100 in collateral here, plus 400, that's 3,500 in collateral. Yeah. Okay, so that's what it is. I basically have to calculate my own buying power, which is dumb. So I have $3,500 in cash secured put collateral, which leaves $692.65 buying power available, which is this number. I don't remember tastytrade behaving like this before. It's kind of annoying, but that gives me $600 left to spend. So maybe I will just go ahead and sell one in BITF for next week. What did I say I had? 692. I could probably sell 2 of these. Let's see if it lets me. Because I should be able to collect $40. It's going to reduce by 660. Yeah, barely. This should fill now. No? No fill? Jerks. Okay. So now, yeah, I got $28 in buying power. So this is fake news, this cash number here, apparently. Thanks, Obama. All right, so it's a little bit annoying that I'm increasing the complexity of my portfolio because I'm adding positions here. It's more to keep track of. But this is a little bit more of an efficient use from a reinvesting the premiums position. I've been able to collect premiums on top of the premiums that I was already collecting. No guarantee that it'll be more effective, because if we do rocket up from here, then these will print a lot more than these limited upside plays here and here and here. Buffalo's short the November 28 360s. It's only a $2 credit to move to 12.19. I'm probably just going to wait. Yeah, those are all the tough decisions that we have to make, especially when the price is down so much. And, you know, how does it go? The market can stay irrational longer than you can stay solvent. But if we're Bitcoiners with low time preference, you know, maybe that starts to change. Dude Face says government reopens and face melt up. That's my guess. The liquidity crunch is slowing down everything. Absolutely possible. I've decided I prefer to roll on green days rather than red. Maybe it's because I just like green. Yeah, that might be better for my mood. Yeah, this This is ready to roll, but again, I'm in a situation where I only have 43 days to expiration, and I'm selling this against this position. So I can roll down to 320, 320, 325 potentially. So this isn't going to be enough. This isn't going to be worth my time. Rolling strikes down to, nope, not that way, this way, to 325 for a 65-cent credit. It's like, eh. Yeah, so screwing up the longs is just making it more difficult on these poor man's covered call trades. All right, nothing left in this position. So let's just close them. And let's see what effect that had on my net theta. So that drops my net theta considerably negative. So let's see. Do I want to go ahead and roll for 1 day expected move? How much theta would this give me? 146. That would do it. I can, yeah, so let's see. Yeah. I mean, these are extremely aggressive. Where did they go? Yeah, it's these. Could we blast way past 250? Yes, of course. So that only gave me like $300 to play with, which is enough to get another share. Actually, the 40 shares that I've accumulated would be about 12 grand. So I can actually add a poor man's covered call without decreasing the number of like increments of 100 shares. So let me see, which poor man's covered calls do I have that are actually structured well? These are still decent. These 200 strikes are still kind of all right. So I could add one more of these. These could be rolled out. One week. But let's see, where am I? So I'm gonna average the two. Actually, this is 400 strike. So I could sell the can I actually sell the 265s here? That's weird. Or the 290s. All right, so I can roll these. I'll roll them 1 week. And at least a 1 standard deviation. Maybe I'll roll to the 300 strikes. Okay, that's going to give me another grand to play with. Okay, gotta group and ungroup again. These, right? Yeah. Damn. I might as well roll these down as well, because it's half of what I sold them for. So I can at least roll these down for a similar credit, right? Yeah. So to buy one of these and sell one of these is going to cost me $6,000. So I can sell enough shares. What was that, 20 shares? No, that's only going to give me $4,000. 25 shares. Whoops. Actually, I don't even need to sell that many. Let's go back to the 20 shares because I think I had a little bit of cash as well. Yeah, I got 69. So if I add March 20th, 200 and sell another 300. March 200 buy. December sell. This will cost me $6,000. Okay. Should be pretty close. Okay, so an extra $1,000. I miscalculate there. I guess I can buy 3 shares back. Probably get some kind of wash sale rule. Yeah. So if the price does drop to 200, I can peel off another 20 shares for what, $8,000? No, $4,000. Yeah. Might be able to add another position, depending on how everything else shakes out. And that should have added a little bit to my theta position, because that's the net theta, unfortunately. So that's like -14. And adding one of these was like +20. So, I mean, just chipped away a little bit of theta here. All right, no buying power to speak of. Looks like I will be assigned some puts at 17.5. So I'll be underwater on this position a little bit, which would be fine. I can just turn around and sell covered call. Looks like, what did I sell this for? So I sold this for 11 cents way back. This was this was just yesterday. Oh, that's right. I managed to get this to fill yesterday. So we'll see. If we're still trading at 152 next week, these will get called away, and probably for a loss. Yeah, for like a tiny loss, potentially. I'm not sure what my true cost basis is. No big deal. Cypher and Wolf still cooking. Those are the ones that I copy trade with my brother-in-law. Okay, this one might be ready to roll. Yeah, sold it for $1.30. It's ready to roll at like 78 or lower. And let me just make sure what the long is worth. It's a 55 call. It's worth 11. So as long as I stay 66 or higher, I should be good. Right now, this expires on 12/12. So if I roll it to 12/19, 66 or higher, I can actually subtract the premium that I'm collecting here, so I can actually go a little lower. I can go to the 65 strike if I want. Tempted to do that. Of course, I don't get an insta-fill. Let's put it back in. Let's do 0.8. There we go. Yeah, see, this position is already rolled out as far as I possibly can. So I think I'm kind of stuck with this one. Let's see what my long strike is. I've got the 300. Yeah, so I can't roll this below 325 anyway. So what would that look like? Yeah, this credit's not really worth my time. So I think I'm kind of stuck. Letting time do its thing with that one. Do I have a call on my other 100 shares? Oh, so I've got, I might get 100 shares called away here and another called away here. Let's look at what the cash secured puts look like again. I could sell the 150 and get paid a nickel. That's just for one day though. So that's actually 3%. It's actually 3% for one trading day, which is kind of insane. It seems like nothing, but in percentage terms, it's pretty wild. So why is there no one wants to, there's no bids for next week. That's kind of weird. Maybe it'll be a little bit more liquid. Why would you pay more for a cash secured put for one day than for 8 days? Does that make any sense to anyone? I could get 10 cents potentially at the dollar. This is going to be fun. This is kind of, oh, I see. Because the price keeps going below, it's fluctuating below and above 150. But still, there's no premium at the 150 for next Friday. It's kind of weirdness. Anyway, why not? So I actually got paid six. Yeah. Yeah, $6 credit. So I'll, one way or another, even if I could close this tomorrow, I'll just let it expire worthless. The bid-ask spreads, it's not worth paying even a penny to close this when my total profit is 6 pennies. That'd be like 1/6 of my entire profit just to close this thing. So whether I win or lose this thing tomorrow, I'll just let it expire. So maybe this drops to below 150, which would drop my cost basis to like, I don't know, 170 or something maybe. I think that's about all she wrote. Let's see. I've decided I prefer to roll. Oh, you already said that one. All right, so we're all caught up on the comments. That's all the trades for